Hi everyone, it's John and welcome to another edition of Cozy, Charming, Crazy Real Estate, where we talk about everything real estate. And today we're going to have some fun. We're going to review the 10 most misunderstood terms that you might hear during a real estate transaction. Now, if we do our countdown and by the end, you don't hear a term that has currently got you befuddled or that you're curious about or need to know more about, please leave a comment below and we will try to provide an explanation. And we might even use your comment as the basis for a future video where we can dive a little deeper into that topic. So let's start our countdown, starting with number 10, selling agent. Now, a lot of people believe a selling agent works for the seller. That person actually is called the listing agent. And then we have the agent that's working for the buyer is also called the buyer's agent, but sometimes they call that buyer's agent the selling agent. Why? Because they're the ones that see the property out on the market. They see a bunch of them and they have a buyer, and they're actually going to try to sell that buyer one of the properties that's available. And so sometimes you'll hear them called selling agents. Again, it's the buyer's agent. Number 9, mortgage prequalification. A lot of people believe, well, if I do a pre-qualification, maybe I have a phone call or a sit down with a lending officer, a mortgage officer, and they review with me how much I make, how much I have in the bank, my credit score. That once they have that information, they kind of run the numbers and come back and say, well, I think these are the kind of loan products or programs that you might qualify for. So here's how much interest you might, maybe here's a range of how much interest you might have to pay, how many years it might take to repay that mortgage, and then of course the limit of how much you can buy and what that means in a monthly payment. So the purpose of a pre-qualification is to say, yeah, based on all your qualifications, you and your agent should be looking at houses maybe at this dollar value and below. It is not a commitment. This is where some people misunderstand. It's not a commitment by the bank. It's not an approval. It's not a qualification. It's a pre-qualification. So it's just a screening that gives you an idea of how much you might be able to borrow. None of that is put in stone until you actually submit a formal application. We're going to get into that in a minute. So number 8 on our list is mortgage final approval. Okay, we're buyers. We found a house. We're under contract. We have a copy of the contract. We have our mortgage application. We've attached all the pertinent documents about our income and credit and bank statements showing our down payment in the bank, all that good stuff. We send it off to our loan officer, who then submits it to their underwriting, which are the people that actually make the decision, and they come back with a final approval. And all we're waiting for now is closing day so that the bank can send the money to escrow. Escrow can pay off everybody, and the transfer of ownership can take place on that day. Is it that simple? It is not that simple, and that mortgage approval is not final. And here's why. On escrow closing day, a representative of the lender, the bank or mortgage company, whatever it is, will call your employer, Mr. Buyer, and confirm that you still work there. Have people quit their job the day before escrow closing because they only kept the job they didn't like just long enough to get their loan approval so they could get this house? Yeah, people did it. And because of that, the mortgage company, if they hear you're no longer working, automatically they cancel that loan and you don't get the house. The other thing that they do is they will run your credit report. Have people ever gone out the day before escrow closes and bought a brand new car that is now appearing on their credit and actually takes their debt to income ratio out of the qualifying range, and so now they lose that mortgage? Yeah, it's happened. And it's not common, but it does happen. So listen to your mortgage loan officer, because final approval is not final in reality until that escrow closing day, when the mortgage banker does all that and actually transfers the money and the deed gets recorded. Number 7, jumbo loan. The government guarantees a lot of different loans, either through insuring or underwriting or providing mortgage loans. You've heard of FHA, Fannie Mae. There's many of them. There's just a few that serve the consumer market for people that want to buy homes. But the government lends out a lot of money, and when it comes to homes, they will survey the real estate market and say, hey, we are only willing to guarantee or underwrite mortgage loans up to a certain dollar limit based on our survey of the market. And that's fine. Anything above that limit of what they will do is called a non-conforming loan, because anything below it is called conforming. Anything above that limit is non-conforming, and it's also called a jumbo loan. Now, can you get a jumbo loan? Sure. There's even mortgage lenders that specialize in larger jumbo loans. But it is a loan that it is in an amount above that limit. Okay, number 6, as is, one of my favorites. As is sale is one where you go to see the property, you're buying it just as it sits. So if the seller says, I'm not going to do any repairs, I'm not going to paint it, I'm not going to mow the lawn, I'm not going to do anything, what you see is what you get. Is that always the way that you buy it on an as-is sale? Actually, no. There's 2 things that can affect an as-is sale. The most common are if the property is not what the mortgage lenders call a whole property. They might kill your deal, because once they see the appraisal and they see pictures of, let's say, a wall that has had all the wall board taken off so that the studs are exposed, there's a bunch of vertical studs where there used to be a wall, they're going to say, well, that's not a whole property, we're not going to lend on it. They can cancel your loan unless somebody fixes it and you get a reinspection by the appraiser. The other thing could be a government issue, and here's the most common. Here in the San Francisco Bay Area where we work, most of the local governments have a requirement that you do a lateral sewer line inspection. There are other inspections that can be required, but this is one of the most common. And if you don't know what a lateral sewer line is, it's very simply, you have a house, you have a sewer line, let's say, that goes under the street, and there's a pipe that carries sewage from the house, usually downward at an angle and into that main sewer line. That pipe is called a lateral sewer line, and normally government agencies require that when a property changes hands, an inspection be done. So usually a licensed contractor, an inspector comes in, they put a camera down that line, they confirm that there's no breaks in the line, there's no sags where water might sit. And if any repairs are needed, they'll note it in their report. And you have to disclose that. And most agencies, not all, but most agencies won't stop the sale, but they will require that the buyer have a plan and a time frame during which they will actually, let's say, repair or replace that pipe if it is not to specs, or if it's broken. So again, they might not stop it, but they can start fining you if you don't do the repair within the time that they give you. So as is not always as is. Sometimes it can be overridden by government requirements. Title, number 5, title. If you buy a car, lots of times you get a piece of paper, sometimes called a pink slip, and it might say title on it, title to the car. We don't have that in real estate. So we use the word title as a concept for the piece of paper that proves ownership is called a deed. And the most common is a grant deed. A grant deed is the deed that transfers ownership from the seller to the buyer. And so the title is not an actual document that proves ownership, but we talk about title. Number 4 is days on market, cumulative days on market. And this can be confusing, but it's actually really simple. Once we put a property on the market in, let's say, the multiple listing service, the computer that multiple listing service uses starts ticking each day and actually puts up on our listing the number of days, counts the number of days that that property has been on the market. And that's a very significant thing because the health of a market or the amount of activity is often judged based on the number of days homes sell or are on the market before they sell. A hot market, homes are going very quickly, very few days on the market. A market that's kind of slow, maybe more days on the market. So what are cumulative days on market? Here's a good example that's pretty simple. We had our house on the market, let's say for 30 days. We've had some offers, but we haven't accepted any. But at the same time, we got into escrow on another place that we're going to go buy, and that's going to be the place where we're going to move when our home sells. Wait a minute, all of a sudden we get a call and something has happened with our purchase where we're going to go live, and it's been canceled. So all of a sudden now we have no place to live. So we call up our listing agent. We say, hey, I have to put my sale on hold here. Can you go into the MLS? And they call it usually a temporary withdrawal. And they say, can we withdraw it from the market? Give me 30 days to go find another place to move to because I don't want to be living in my car after this place sells. So we go off and we find another place. Luckily, we're good. So 30 days, we go back to our listing agent. We say, put it back on the market. And he goes, yeah. So we're back on the market. But now not only do we have a count of 30 days on market, we also have another 30 days where it was withdrawn. And now we have to report cumulative days. So we have the 30 days it was active. We have the 30 days that we had it withdrawn. We now have DOM 30/CDOM, or cumulative days on market, 60. Now we can explain to any potential buyer, why are you on the market 60 days? This is a good property. You should have sold in 40. Well, we can explain it. We explain what happened and why we put it on withdrawal. It had nothing to do with the property. So, but now we're on and we start ticking again at 61 cumulative days. Now let's say, however, that we want to reset it all to 0. The only way we can do that in most markets is we take it off the market, we cancel the listing, come back after 60 days. The date that it goes back on the market must be greater than 60 days from when we canceled it. That's the only way to reset that ticker. That's in most places. The 60-day rule may be longer or shorter. Where you are, ask a local broker if you're concerned about that. So, number 3, contingency period. A contingency period is also called an inspection period. It's that time at the beginning of escrow where the seller must give you all the information they have, normally within 3 days after you agree on a contract. The seller has to provide all the information and reports that they have about the house to the buyer, and the buyer has their time to do all their final inspections. So contingency period and inspection period are kind of the same. However, the importance of a contingency period is if you don't complete all your inspections by the end of the contingency period, but you still want to go on with the purchase, and then find, let's say it's a 21-day contingency, on the 23rd day, you find something out about the property that makes you not want to buy it, you would forfeit your deposit after that contingency period expired. So it's an important thing, but it's basically the inspection period at the beginning of escrow. Dual agency, number 2, one of my favorites. Now the classic definition of dual agency is when you have one agent who's representing the buyer and the seller in one transaction. Now that's a classic definition. It is legal in most states. It is illegal in a couple states because there's considered a conflict of interest. You're trying to counsel both sides. And because of that conflict of interest, Cordon Real Estate, we do not do dual agency. It's pretty common. Just every time I sell a property, I'm doing open house, someone will come up and they'll say, hey, I don't have an agent. Would you represent me? I said, well, I already represent the seller. And they say, well, can't you represent us both and take a discount on your commission? And I say, well, no, it has nothing to do with commission. We are very aggressive negotiators, and we can only represent one side in a dogfight. So we do not do dual agency. Again, it is legal in California. Lots of brokers do it, and they're very ethical, but it's not right for us. But dual agency, same broker for both buyer and seller. Realtor, number one. A realtor is, by legal definition, a realtor is a member of the National Association of Realtors. Now, when you get to the end of this video, you're going to see some information about me. It says my name, and it says I'm a broker, which is a license I hold with the state of California. And I am also a realtor, but it's spelled in all capital letters with the little circle R registered trademark symbol at the end. That is how, according to the National Association of Realtors, realtor should be presented. Now, the National Association invented that word over 100 years ago. They created the word to define members of the association. It didn't mean agent. Today, it's slang for agent, and a lot of realtors, big R's, will even misuse it and just do it in all lowercase letters, and they say, well, this is, I'm a realtor. They'll use the slang. I don't. I know a lot of brokers that will not. They only use it because National Association of Realtors is a good organization to be in. They have a code of ethics that agents are required to abide by. And there's also a lot of education involved. It's a great organization. And however, to be a real estate agent, especially here in California, you are not required to be a realtor, a member of the association. All you need to have is a license. So I always ask people when they say, oh, I'm a realtor, I'd say, well, big R, little r. And if they say little r, I know they're not a member of the association. Anyway, that is our list of the 10 most misunderstood terms. If I did not cover one you have an interest in, please leave a comment. If you like this video, please hit like. And I hope you will subscribe, because I love to have you back again. We're going to be posting another, or several actually, top 10 lists again pretty soon. So until then, please watch out, hit subscribe, and watch for our next video. We'll see you then. Take care.